I'm joined today by Mike Ralston, the CEO of Blencowe Resources. Just a disclaimer, I am a shareholder and all of the information here is for informational purposes only and not to be regarded as investment advice. Right, now we've got that out of the way. Mike, how you doing?
Good. I'm very well, thanks for having me.
Good. Over from Perth for the first time in how long?
Well, we've been stuck away for 2 years, so it's been a long haul, but great to get here, and stopped over in Uganda for a couple of weeks on the way as well.
Let's actually touch on that. How was Uganda? What was the work going on over there?
Blencowe acquired the Orom Cross graphite project 2 years ago, and straight away we started working on it, and that was about the time COVID hit, so we all got stuck, particularly us in Western Australia, got locked away. So we've had to do everything by Zoom and by phone calls and emails and everything else. But in that time, we've completed 2 significant drilling programs for about 5,000 meters of diamond drilling. And we've done a lot of met test work. We've done a preliminary economic assessment as well. So we've kept it rolling. But as we move forward, sort of closer to pre-feasibility study stage now, we've got a team on the ground now, which we didn't have before. So it was good to get back to meet up with them, to obviously find out what they're doing and where we're going, and to prepare the groundwork with the government for their support for our next phase of development, which is production. Before
we move on too much, as I should have asked, tell us a little bit about your background and what Blencowe is in terms of where you're listed, market cap, etc.
So I've been working in the junior resource space, listed space in Perth in Western Australia for nearly 20 years now, and I've developed gold, base metal projects. I've done a lot of coal, and I guess the space that I like is finding high quality projects that are in an early stage, and really trying to put as much value onto them as quickly as possible, with a view to sort of getting into that pre-production or production phase. Not to say that we can't produce. I've taken 3 projects into production, but I think that there's a different level and a different type of mining company that can take over at that stage, and we'll see whether that's the same for Blencowe or not. Blencowe Resources was set up as a shell 3 years ago, specifically brand new shell, main board listed, standard listing on the LSE, and it really was set up with a view to finding a decent mining or resource project. We had earmarked this particular Orom Cross graphite project for it, so we did a whole lot of due diligence and effectively completed the RTO 2 years ago, as I said, and raised £2 million at the same time. So yeah, BRES is the ticker, and Blencowe has literally been going with the Orom Cross project for a little over 2 years, I think 2 years and 1 month, and we've kicked a few goals, so it's going along nicely, but there's a lot more to come.
Touching back on something you just said there in terms of whether you may or may not be the ones to put this into production, I mean, most of the hurdles have been done, in my view anyway. You've got the mining license, there's no more permits that need, and that's usually a huge hurdle to get yourself into production. So done that. The metallurgy at the moment, I mean, you can talk us through that, but it's around 97%. Obviously, most people know that battery grade anode material needs to be 94% or above. So again, you've got the product, you've got the license, you're redoing a pre-feas at the moment. I mean, it looks like you should be able to put this in production, right?
I think so. You know, the absolute key with graphite, as you say, is to not necessarily what's in the ground, but it's what it can be upgraded to as a concentrate. And if you're talking about specifically the product that will go into the battery market, yes, 94% is that entry level, and anything above that gets a premium. So we're sitting in a good space. We've had some very good met test results, not just the grade, but also the fact that we're getting high recoveries, the fact there are no impurities, and we're literally right now in the process of sending our technical data sheets to a wide range of end users to let them have a look at the quality and the chemistry, and hoping to obviously get their feedback quite shortly. So yeah, we've got a 21-year mining license from 2019, so we're a couple of years into that now, but you know, we can renew that at any stage once we're up in production, so it's not a problem. And that really de-risks us a lot. We've drilled this out. We know there's 2 to 3 billion tons of graphite at Orom Cross, and we've only drilled out less than 1% of it. It's a small, tiny little spot within a 19-kilometer wide deposit. Sorry, 19 kilometers long by 1.5 kilometers wide deposit that goes anywhere from surface down to 100 meters. And we've taken a little patch of that and we've drilled it out to 25, 30 meters only. So there's more graphite down below where we are. There's more graphite around us. But that part that we've drilled out is probably 20 years life of mine at current levels that we're anticipating. So there's more than enough. We don't need to go and drill out anymore. Otherwise we'd just be drilling forever. And the anticipation now is, yep, let's go through PFS next month. And if that's as good as we hope it's going to be, then let's move towards first production in a small scale pilot sort of stage for 2023.
What about Uganda as a destination? Obviously, you're an African yourself. Have you worked in the region? I know you're very familiar with East Africa, but a lot of investors probably aren't as familiar with Uganda as a mining jurisdiction. What can you tell us about that, and how much confidence is there in that government there?
Yeah, well, taking a step back, I am by birth a Zimbabwean, so I know Africa quite well. I also worked in East Africa and Kenya for 6 years before going to Australia, so I understand and I really like East Africa, and I understand it quite well. But Uganda as a destination for me is one of the top jurisdictions in Africa for a bunch of reasons, largely to do with sovereign risk. There are a handful of those countries, the Botswanas, the Namibias, the Zambias, Kenya, Uganda, and probably Ghana. Those are the ones that I like because your sovereign risk element is less troublesome. Nobody wants to go and spend a decade of time and effort and money developing a project in a jurisdiction and it all gets taken away from you. So we like East Africa, and as I say, I know it quite well. Uganda is a landlocked country. It's just to the west of Kenya. People probably know Kenya a little bit better. It's obviously goes on the eastern side of Africa. But because it's landlocked, a lot of imports go into Uganda and through it to South Sudan via the road and rail network, and they return empty because they don't have a lot of exports. So we're very lucky that we'll be able to backfill for our transport option to get product out of the country at a pretty good price. So that's good. But from a country perspective, it's incredibly mineral rich because it sits at the northern end of the Great Dyke, which is a mineral zone that goes all the way down through DRC, Tanzania, Zambia, Zimbabwe, down to South Africa. But out of all of those countries, Uganda has not developed its mining industry nearly as well as the others. And there's a whole lot of reasons historically why, but I guess they're less important than the fact that they now want to play catch up. They're very, very keen to get some mining projects up and running. And through the engagement that we've had with them, they understand that having a battery metals project that's out of a London listed company will get them a lot of profile. And so we are fortunate to have a lot of government support. When I was there recently, I met up with a number of ministers. And you get the opportunity to meet with them and also the permanent secretaries and the people that work underneath everyone to make it all happen. And they are all showing huge support to help us get this up and running. And we need their support. Yes, we have a lot of infrastructure already in place. We have roads there all the way to the site. We can connect onto the grid very easily. We've got access to water. Everything else that you require is actually there. But government support comes in many different ways. So having their support, going there as I've just done and presenting to them and letting them understand what we're doing and when we're going to do it, just brings them along for the ride. And I think that going forward, if we continue to enjoy that support, we're on a good wicket.
Just to go back on the PEA, because some of it still is relevant, and I think one of the things that I think most people are very fascinated by is obviously the low operating costs and the all-in sustaining costs seem pretty low. How are you able to achieve that?
Yeah, well, the majority of the reasoning for that is that we're literally going to be scraping it from the surface. There's no drill and blast. And also because we're not taking out of hard rock, so you've got to go and crush it, you've got to go and grind it. And most of the energy intensity and the higher costs in your processing plant come from all the milling at the front end of it. So there's none of that. And obviously labour costs in Uganda are pretty low as well. So we're quite lucky that we've got a low strip ratio. As I say, no drill and blast, no milling. And we're anticipating to come through around about that same $500 per tonne full operating cost to get product upgraded as a concentrate and all the way down to Mombasa port in Kenya. and there we'll put it on a ship to wherever in the world it's going to go and be sold as whatever end user requires. And that will put us at the low 25 percentile cost curve in terms of graphite projects worldwide. So that's a good starting point, obviously.
One of the other things, obviously, is you've actually got a fairly mixed bag in terms of graphite flake sizes as well, right? So what is it, around 35% large jumbo? What's the breakup?
So it's all important as to what it ends up as. I mean, we start off with about 60 to 70% as the larger flake sizes, but obviously as it goes through the various phases of washing and ultimately getting to your 96, 97% concentrate, you lose some of that, you break them up. So we end up with about 35% as being jumbo and large flakes, which go into one different market to the 65% that come out as these medium and small flakes. So it's a great mix because those jumbo and larger flakes sell for a whole lot more. It's the traditional market that goes into the I guess the steel industry in terms of lining foundries. It goes into the foils, the expandables, all of that flame retardant type of product. And the other 35% sells for less in terms of unit pricing. But at the same time, that's the market that's anticipated to explode in terms of demand for obviously lithium-ion batteries in particular. So it's a great mix because it allows us to get a weighted average selling price that's well north of $1,000 per ton, and that starts to get quite interesting in terms of margin. And obviously, if we can start with a smaller production quantity of concentrate that we're selling, and then just start lifting that as the anticipated demand lifts, we should end up with a pretty good project.
When we look at the demand graphs from Benchmark and other sources, it looks like 2024, 2025, you've got that hockey stick starting. But the way that you're actually planning this, you're actually looking to go into production next year on a small scale. Can you talk a little bit about that and then how you're planning to ramp up after that?
Yeah, so as you say, Benchmark Minerals Intelligence, one of the leading analysts for graphite, and many other people are forecasting there's going to be a big surplus of demand over supply from about 2025 onwards, and it starts to get to become a big problem from 2030 onwards. So everyone's anticipating that, everyone's considering what it'll do with pricing, etc. But at the same time, and we're anticipating going into production on our main plant for 25,000 tons of concentrate from 2025 onwards to line up exactly for that moment to happen. But at the same time, graphite is a little bit different to other metals. You can't just sell it into a London metal market. You can't sell it into a mint like gold. You actually have to go out and find your end users. And that's not just for the battery side, it's for the other side as well, the traditional market. So what we've been told by our very experienced consultants, our marketing consultants who are helping us in this regard, is that we have to pre-qualify, which means that we have to start off now by sending them technical data sheets. If they like what they see, they're going to ask us for more samples, and they'll go and do their work on the samples that we've got in the labs already in Canada. But beyond that, if they like it, they're going to be asking us for product from the mine itself. And they want to understand that we can not only mine it, but process it and send it all the way to wherever it may go to in a consistent manner over a period of time, and not lose the properties, the chemical and end qualities that the concentrate has got. So the next phase beyond the samples is really production. And if we can do that successfully over a period of 1 to 2 years, we'll probably get ISO certified in that time. Then we will be a standout in terms of what the end users can see in terms of producers. And so when we turn on the lights and start producing 25,000 tons from 2025, there's a lot of 25s to that, isn't there? Then we have the ability to sell it, because obviously if you start producing that quantity and you can't sell it, it's a problem. So we're trying to ensure that the sales cycle is really locked in, and it's easy to get agreements, but they're all non-binding, so you've actually got to make sure that it's a process of pre-qualification where they're looking at what you've got and they're liking what you've got.
Yeah, so I think the idea is then, so I think 2023 pilot plant production, yep. Send your product to all the end users, get those agreements in place, ready for full-scale production, or at least 25,000 tons in 2025, and then I think you were talking about
scale up from there.
You're scaling up, so then 50, 75.
Yeah, and after 10 years, so by 2035, we're talking about 100,000 tons. But at any stage, we can tweak that. We've got enough product, as I say, for 20 years at those levels, but if we wanted to jump to 200 or 300,000 tonnes, we're going to build our plant in a modular fashion that you can add on to that quite easily, and ditto with the tailings and the mine site and everything else, because we're anticipating that demand will increase. So we want to be ready for it, and we want to be able to move quickly and cost effectively and efficiently into higher scale of production. But to start off with, it will be a smaller plant. We're anticipating the pilot plant to be around 1,500 tonnes per annum. And that's just enough quantity to get them all to see what we're doing. At the same time, it's not requiring too much capex. It's the risk involved in that is not super high. But actually, it requires us to go and get all the infrastructure in place. Roads, power, communications, mine camp, tailings, everything that you require on a smaller scale has to be there. So it's a good dress rehearsal, and we can obviously show anybody from the second half of next year, come and have a look at what's on the ground, and we're producing and we're selling, and that puts you in a different space to the explorers, and highly leveraged into any increments on the prices if they start to rise.
So PFS due next month, a couple of months? Next month. And then what we haven't also touched on as well is, obviously, there is a green aspect to this in terms of the hydroelectricity that's coming, that should be coming into the power grid. How far away is that?
It's actually in the power grid already. So the actual dam itself is about 150 kilometres as the crow flies, but a little bit longer if you were to drive it. But it's pretty much all of the grid power up there in Uganda is hydro, because they've got some big hydro plants. So that's definitely in our favour. But just to touch on that sustainability side, like everybody else, I guess, in the graphite space, we like the fact that a high 65% of what we're selling is going to go into batteries that are going to ultimately drive electric vehicles, and that's nice and I guess renewable in terms of whatever he's thinking. So that's a plus. But at the same time, we don't think that's good enough just to rest on that. We need to also produce it in a manner that's and not just ESG compliant, because everybody's going to be doing that. We need to be 5 or 10 steps further than that. So we're really getting involved in that from the start. We've engaged with ERM, which is one of the leading global consultants in ESG and sustainability matters. And they're advising us on how we can build a plant, manage the whole process so that we become a whole lot better than the average in terms of that sustainability side. So yes, obviously the hydro power is a huge part of that. We're going to be hopefully doing this entire processing and mine site processing plant and mine site on hydropower and solar. We might have to have a diesel generator somewhere as ultimate backup, but hopefully we never turn it on. And it's a lot cheaper to do it this way. So, it's a good call from a commercial side as well. We're talking about, electric drying of product. So that's good. We're talking about obviously having a much smaller footprint in terms of the equipment that goes and mines it. And we're just going to look at each and every aspect of this to try and ensure that as far as possible we are, it's a loose term to call it green graphite. People don't necessarily like it, but it does explain that you're going a lot further than the norm in terms of what you're producing.
Well, it's not just that though as well. You've also set up a fund for the local community as well, and that you've got some commitments there, and that seems to be really helping the locals too. Yeah, so the S part of ESG is obviously social, and for us, we actually inherited a community agreement which the company that we bought this project off had negotiated, and I think it's a good thing. I've just been back in Uganda and sort of refining it a little bit, because they were a little bit patchy in terms of the dates and times and how much was going to get paid when. But the long and the short of it is that we've got an agreement whereby we will pay the community for use of that land, and by their terms very handsomely, and that money goes through a community fund which everybody's very closely monitoring, as you can imagine, to ensure that it's spent in the right way. Already with the first payment, they've bought agricultural equipment, they've bought tractors, and all that is very good, because ultimately this is going to be life-changing for the community. When we set up a mining project there, they'll be able to get jobs across the board, and we'll obviously train as much as we can. And we've set an educational fund up. We've already got a couple of kids in there already, and that'll continue and grow. When we start building things, we'll probably be building a few classrooms for the schools
We'll definitely be putting some water bores down for water, which is a problem for them at times. And we just want to help them. And at the end of the day, I've been doing this for a long time all over the world. And if the community comes for the ride with you, you get a decent project that works going forward. If they don't, obviously you have problems. So it's in our benefit to do that.
Let's look more at the corporate side of the company. So obviously, like you said earlier, you're listed in London. Market cap at the moment is around 8-9 million.
Yeah.
The way I look at this personally is that you've got a world-class project here that's 1%'s been drilled. You've got world-class metallurgy. You've got your social license. You've got your licenses to actually put this thing into production. You've got a really solid plan, a PFS coming out, a planning to go to pilot phase and then ramp up and then be modular and react to the market. I think it's all really the right things you should be doing, but there hasn't.
Why is the market cap like it is?
Why hasn't the market recognised it? Is it purely because you've been stuck in Perth, or?
No, I don't think that's right. I mean, a little bit, because I've had a really good reception around London for the last week, so I definitely think getting over here more often helps. But I think most of the problem is that our shareholder base that we've kicked this off with has been almost 100% retail. Yeah. And we all know the retail space, when people make a little profit, they jump out and go back and do it all over again. So you're kind of in the hands of the gods a little bit, and that's fine. I mean, I don't have a problem with that because we like the liquidity that it brings. But I think as we progress now through this PFS stage into production, we want to start changing the register so that we've got a lot more institutional or high net worths that are stickier, that see the 12 to 24, maybe 36 month plan. And as we suck more of the shares that are just revolving around and churning around in the retail space out and put them in the hands of longer term sticky shareholders, then I think we're going to start seeing that share price start to change. And obviously the catalyst that I'm hoping that's going to really kick that off will be the PFS.
You have started that to an extent already, though. I mean, you've got the old vendors no longer in the company. We've just had RAB. They've just built a position.
Yeah, so RAB Capital, which is a specialist mining fund, and particularly in the sort of smaller end, well known around the UK and even worldwide, to be honest. They came in last month in April, and after a discussion and a presentation, they wanted to take a 10% position, and we offered them that to come on board. They give us credibility. I hope we're going to give them a decent return on their investment over time, but it's the first fund. They've got a 10% position. Other funds and other high net worths looking at this can see that RAB have done some DD, and they're obviously involved. So it's a good start. We've probably got 30% in RAB and management and board's hands, and the stickier shareholders' hands, and 70% in the retail space. We need to, over time, turn that around so it's the other way, and get 50 to 70% into long-term supporters' hands. And once we do that, then we're going to really see this thing fly, because you just haven't got that same propensity to wash it through.
Just to finish things off, talk us just through Orom Cross, because obviously we've got the PFS coming out, and then talk us through about what to expect the next 12 months after that. I think there's some more met work potentially?
No, the network's done. So that final work is literally coming through right now as we speak, and we're completing the technical data sheets, and we're going to be sending that out. It's happening as we speak. And what that means is through our consultant who knows the market very well, we'll be sending sheets which basically say this is the products. Each and every product has a different one. That's what it looks like. They will come back to us to tell us whether they like it. As I said, then they'll get samples. They'll have a look at the samples in their own labs. And then they will tell us if they want to continue, and likely they would be asking us to produce something at the site. So we've got to be anticipating that and moving towards production on a small scale, as we've talked about. And I think that in terms of timing, we'll complete the PFS, by 30 June, that's our target. I'm hoping we'll be certainly on or around that date. And then we'll make an announcement to the market. And then we're really going to go away and do what I call a pilot project study for maybe 2 months, where it really just takes the whole, because the PFS has been done on the bigger project. We take the smaller part of that, which is the first stage, and we just make sure that we've done the right amount of work to understand what our project metrics are going to look like in terms of how much money we need, what we're going to do with it. Because obviously, is it profitable or not? Do you have to raise more money to ensure? I anticipate that it will be at least break even. But we just want to make sure that when we go out and raise a little bit of money to put this pilot into production, we have all of that in place, and we know that we can obviously raise it with a view to not having to come back and raise any more later on. So, yeah, there's going to be a lot of, well, firstly PFS news flow, then I guess end user news flow as we start to show companies that are interested. And then as we move into pilot phase, which will be later this year, early next year, that's quite exciting because you've got a lot of milestones going on there. And then in the background, obviously the nickel, we're going to be drilling some holes there, hopefully by the sort of third and fourth quarter. If those start coming through some decent results, that's quite exciting. And we're just going to keep doing all the work that we do because we don't stand still, as you can tell. Yeah. And as you deliver work and as you deliver your next and your next and your next milestone, there's just stuff to talk about all the time.
I'm happy to be along for the ride anyway,
myself.
You. But no, Mike, thank you for coming in.
No, thanks very much.